Thank you so much. Good afternoon and welcome to this session on building a global startup, successful strategies in international expansion. So my name is Lee Williamson. I'm the editor of Generation T, Tatler Asia's content and events platform for the leaders of tomorrow. Now, one of the most difficult questions any founder faces is the looming question of global expansion. You've had some success in your home market, perhaps. You've built a strong brand. All the important metrics are looking good. You're cash flow positive. But do you want to risk it all for that bigger prize? During this session, we're going to discuss the what, when, and how of international expansion, unpacking the smartest strategies you need to follow if you want to turn your successful startup into a truly global business. To discuss this and more, I'm delighted to be joined by three business leaders with plenty of experience in all of the above. I think first off, it's important we establish their credentials in international expansion. Keith Ong is the co-founder, as mentioned previously, of RealVantage, a real estate investment platform with a footprint across the world, including the UK, Australia, and the US. Raunak Mehta is Chief Commercial Officer of Igloo, which is a digital workplace solutions provider with customers served in more than 80 countries. And Craig Dixon is the co-founder of Accelerating Asia, an early-stage VC fund with portfolio companies from 10 countries across Asia. Welcome to all three of you. Now, obviously, any strategy a company takes to expand overseas will be guided by any number of things: your industry, the strength of your brand, whether you're B2B or B2C. But I'm hoping we can pack this 30-minute session with actionable insights today for early-stage entrepreneurs who are watching. In that vein, we'll approach the topic chronologically, from the very beginning of the process of expanding into international markets onwards to the challenges that you may face. And I'll begin by asking the first obvious question: when do you know that it's time to start expanding outside of your home market? You know, what leading indicators should you track? Craig, do you mind kicking us off?
Yeah, sure. So I think what I'd start with is some of this depends on your business model. So some companies have business models that are what I would call global from day one. And this means that you can start selling to customers cross-regionally from day one of your product. We have some solutions like that in our portfolio, including Project Pro, and my startup that I had before getting into investment was a B2B technology provider that was able to sell globally. So in that case, you may actually be able to be global from day one, which means you're selling to people across the globe from day one. Most companies are not that. And so when you look at, there's two aspects to it. There's when are you ready and when should you be talking about expansion? And so even when you're in the very early stages, so pre-seed or seed or maybe Series A, it may not be time for you to expand into new markets yet. But if you're fundraising, you need to at least have a plan for when you will expand into new markets and why. And part of this is because investors will value your company based on the future valuation potential of your revenues. And if they think, especially if you're a Singaporean startup, that you're limiting yourself to the Singaporean market, then you're going to have a much lower ceiling on your valuation. And so even at the very earliest stages of a company, you should start thinking about what the next markets might be for your business and start having a plan for that. And just really quickly, typically the way to start thinking about that is within the traction that you currently have, who are your super users and where do more customer profiles like that live? And for many startups, this is not a country by country decision. This is a city by city decision. But it certainly depends upon the startups. And I think we have two really good folks who've actually executed on these type of things. So maybe I'll end it there and let them add their feedback to it.
Great.
But
Keith, what do you think? You know, when do you know? I mean, you never really know, I'm sure, but like what leading indicators do you think are most important?
Yeah, thanks Lee and Craig for that. Exactly, for us at RealVantage, it's a bit about where we came from. So our backgrounds, we have been investing in real estate globally throughout our careers. So we're very familiar with the markets that we're going into. We have been investing in Australia, UK, and the US for many, many years when we were in the corporate life, right? So now RealVantage was established with the aim of providing investors with this offshore real estate opportunities. We were very sure Singapore has the level of sophistication. Investors in and around Singapore have been investing on their own offshore. But at the get-go, we decided to establish a base in Indonesia as well. So we have an an office in Indonesia to help our investors in Indonesia invest in offshore real estate opportunities. So the questions we ask ourselves really questions will are investors at the level of sophistication? What is the financial literacy that they have? Is the product right at that point of time to be launched in the market? And what is the competitive landscape? Right? So, but fundamentally, all of it hinges down on the team. And we were very lucky. We have a very established team in Indonesia who are able to make inroads and partnerships to help us to get customers. So that's the key behind our strategy. It's all about the team for us. Getting the right team on the ground, who has the network, who has the know-hows, and who has the local market knowledge. That's the key behind it.
Right, Raunak, what would you add to that?
So, see, as at Igloo, we are headquartered in Singapore, and as an insurtech firm, we are a part of the industry that has been around for centuries. Insurance as such. And if you look at insurance across Southeast Asia, you'll find figures being quoted like that the insurance penetration is less than 1% in most of the countries in Southeast Asia. I think this is one of the leading macro indicators that we tend to scratch and get a bit more details into why it is what it is. Plus, given the fact that we are very digitally oriented, we generally tend to look at indicators that show us a positive trend towards digital channel and ecosystem adoption or penetration in those countries. So for us, given a tech country, I have this way of saying that tech knows no borders, right? So if you're a tech company, you can take your products and services to multiple countries. The only thing that we are mindful of is when we are expanding to different countries is that it should not lead to a bullwhip effect down the value chain. So what you wouldn't want to have is that you may expand into multiple markets, but at the end of the day, if it brings about a bullwhip effect and results into a sort of a glut in your pipeline for your product and your engineering team to be able to cater to, then that's a problem. And that's where the cookie crumbles. So I think we are very mindful of that part. And so far, we've expanded into 6 countries in Southeast Asia over the last, I would say, 4 to 5 quarters, in spite of the COVID implications that we had. And it has worked out well, I would say.
Let's talk about that moment when the cookie crumbles. What kind of indicators so these are indicators that tell you that when a company should expand. What kind of indicators would tell you that a company is not yet ready to expand overseas, but instead focus on a strategy of further penetration in their existing market rather than new market entry? Whoever wants to take that one, are there things that you look at that just say, no, this company shouldn't be looking at moving overseas yet?
Yeah, I'll just say something really quick and I'll hand it off.
Go ahead, Craig.
I think for me, just one thing to keep in mind as well is startups have limited resources. And so there's an opportunity cost to keep in mind. And so if you're going to invest, $1 million to invest in the new market versus $1 million to reinvest in your existing, base of operations, what's going to give you the biggest bang for the buck? That would be the main consideration. I think certainly there's some other things with regards to, like Keith talked about, the competitive landscape. And so sometimes there's mitigating factors such as we need to get into that market now and establish a presence and establish a customer base in order to be able to execute on that long term. Right. So there's a few other things there, but I think a lot of startups focus on this really kind of dream of entering new markets and it's going to be great. And it's super challenging. And a lot of startups fail by expanding too quickly and too fast. And so I think it's really important to be defensive and think through those opportunity costs when you're making that decision.
Absolutely. Raunak, sorry, you were going to say something at the same time.
Yeah, so I think Craig touched upon the point. When you look at the return on investment or from an opportunity cost perspective, that's a universal barometer of assessing any sort of initiative that you undertake. I think most importantly, you would get a feeling when the cookie is crumbling, or in a way when people would say that they have spread themselves too thin, or let's say a particular company has spread itself too thin, is when you are not able to actually render your products and services in the most even the core aspects of your products and services. Like for instance, if you're in the insurtech domain, and if you happen to be a full stack insurer, and if you're not able to offer products and solutions that cover the entire value chain from, let's say, acquiring customers all the way down to claims, you would know that you're not doing justice to a market expansion strategy that you had put in place probably 3 to 6 months back. The other thing also is taking a leaf from what Keith said. When you enter into a market, more often than not, you are going to find competitors in that market. And I believe every time you expand into a market, you are looking for new sources of revenue. If over a period of time, you find that you are not able to acquire business, and as a result of it, you have started plateauing 6 months, 9 months into expansion into a country, you know you're not doing the fundamentals of, or let's say the first principles of entering into a market and then spreading your tentacles in that market. So I think these are some of the indicators that I, in my experience, previously have seen, where I found that certain companies have spread themselves too thin. And looking forward, these are the kind of things you probably have to work upon as well.
Quick aside to the audience watching, we will try and make some time at the end, 5 minutes if we can, for audience questions. So do put your questions in the Q&A box and I will try and get to them at the end. But Keith, I'd like to move to you next, if I may, and talk about market selection. How do you pick the correct market or markets for your business? I assume product market fit is your main concern here. Is that the case? What else are you looking at?
Yeah, exactly. I mean, that's one of the key factors, Just give you an example, when we launched our opportunity, our real estate opportunities in Indonesia, we felt that when we started off, we thought something that provides a return of between 9 to 10% or 9 to 12% would be attractive to Indonesians. But whole and behold, when we went in there, I realized, hey, that's not the case at all. They were all looking at much higher returns simply because the landscape there they were providing, the opportunities that they had were all mid-teens to order up to 20% returns. So the product fit is something very important to us. We have to realize that what is the level of acceptance of returns for our investors in that particular market. Right? So for example, in Indonesia, once again, they can put it in a fixed deposit and they give very high returns, right? Whereas for us, we bring forth a real estate opportunity that provide 9 to 10%. That doesn't bat an eyelid for them, right? So we have to look for higher returns opportunities for them. That's one of the key things. Next is also about, for us, importantly, it's about the financial literacy or investors' level of sophistication behind what we're trying to do. Yeah, that takes a bit of, for us, for our type of business, it takes a bit of education to explain what real estate fund management is all about. Some of us just don't get it, which is quite challenging for us. Mm-hmm. So that's where we really need to identify the segment we're trying to target and find a strategy and how we're going to penetrate that segment, right? That's the other key reason. That's the other key factor that we look at, yeah.
Craig, how do you advise your portfolio companies on market selection? What's the key thing you tell them?
Yeah, I mean, for the most part, it is, I think I touched on this a little bit earlier, maybe ahead of time, but who are your super users for your current market and where do more of them live? And what city or country is that? And so typically with most people, there's a Pareto effect with their customer base where, 20% of the customers are providing 80% of the CLTV. What are the profiles of those customers? And profiles are things likely that similar people will love your product in that new market. And what you can do is you can run fairly simple experiments depending upon the business model that you have in your product to generate initial data on traction through those experiments to understand what markets might be best for that. But in a summary, it's who are your best customers and where do more of them live? And ideally, where do more of them live in a market that's similar to yours and is easier to expand to? And it's a challenge in Southeast Asia because you also have to deal with multiple currencies. So there's Forex issues, there's registration issues, there's moving money around,
right.
And a lot more expense that makes expanding into new markets much more risky than, Uber expanding from San Francisco to Chicago, for example. And so these are things that need to be kept in mind as far as the risk to getting into new markets.
Sure. Raunak, anything to add to that?
I think this is one of the most important questions to which you need to have a fairly good answer very early when you are driving a market expansion strategy. I mean, it's not the end of the day if you have to pull out of the market, but then a lot of time, energy, and money probably ends up going down the drain. So I think for us, even before the product market fit, and I believe for companies and industries where they are into multiple products or services, what's really important is that you get a very good perspective of that country for the industry that you are in. Is it a highly commoditized industry? Right? If it's a highly commoditized industry, then you need to figure out whether you are going to have a loss leader route towards gaining market share, or is it going to be a product differentiation strategy that you're going to follow? And that you would know given the country. I mean, in Indonesia behaves in a completely different way as compared to a Thailand. And I think once you have got a sense of it, then you decide whether it's a glass half full opportunity, or or you're probably entering into a market which is a red ocean, right? And it would probably end up hurting your bottom line. So for somebody like us, where when we are playing across 6 countries and every country is so different from a consumption standpoint, every country is fairly different from how they perceive insurance and what insurance means in the larger scheme of things. I think we are in a way a lot cautious about which country we should enter in, so that the answer from a long-term growth and sustainability perspective, we have some good answers right at the outset.
Okay, so let's say I'm a startup founder. I've committed to expanding internationally. I've made my decision. That was the first question. I've picked my market. I've carefully thought about market selection, and I've picked my markets. That relates to the second question we discussed. Now comes the really hard part, right? How do you quickly build new internal capabilities and capacity to drive the expansion that you've decided to do across multiple countries? Keith?
Yeah, I mean, that's a hard question to do. Yeah, I mean, the key behind it, I feel, is still getting the team on board, getting the right people on board. For our business, it's the right human capital to execute the strategy. That's one fundamental part of it. Then the other one that we feel is very important when we expand for our business is to find the right partners on the ground. That could be involved even joint ventures, collaborations of sorts. This is an important strategy for us. That I think is a faster way to scale up, having partnerships on the ground, right? I think these are the two key fundamental aspects that I see. Yeah.
Craig, what would you add to that?
I mean, first I'd see, can you service some of those new customers simply digitally? So from your home market. So what type of product do you have? If it's a digital solution, can you simply start going out and marketing, using the local language, Bahasa if it's Indonesia, and start doing that from your home market without having to invest the resources to actually create an entity and a team of humans on the ground in Jakarta. So that would be one way to go about it. Keith mentioned partnerships. Those can be successful, although I've seen most of them are unsuccessful for early stage startups. The main reason being that the revenues that you can drive for a partner typically don't motivate them very much. But if you are at a certain scale and the partner can be motivated and incentives are aligned properly, I have seen that be successful. So it's certainly case by case, but just be careful around some of those. Those would be the two main things. I really like to see companies run some experiments and service potential customers from their home market, get early indicators of traction. before they would potentially invest whole hog into like a full office and team on the ground, if that's possible.
Raunak, what do you think one thing these early stage entrepreneurs need to know before they start building capabilities for international expansion?
I would say strategy is as good as execution and vice versa. And I've seen that multiple times. Ideas are dime a dozen, but if you're not good at execution, I think any initiative, especially a strategic initiative, would fall flat on its face. So, especially when you've entered a country and you want to make the most of it, I think if you've done the homework in the right way, and when I say homework, it's about what kind of products you want to put in the market, as Keith mentioned, what kind of partners you would want to work with. It's extremely critical that you have those 100-day and 200-day sort of milestones that from a 3 to 6 month time frame, what sort of metrics you want to achieve in terms. This could be, I mean, getting X number of partners or acquiring X number of customers. And if that is not happening, being very flexible and agile so as to modulate your strategy in that country, because no amount of homework would actually give you the first hand knowledge that you would get once you start operating in that particular country.
I have a question just for Craig now from the VC perspective. You touched upon fundraising a couple of times, Craig, and how it relates to expansion. So if you're fundraising, I want to know, what is the optimal time when it comes to syncing fundraising rounds with global expansion? You mentioned that, every VC, everyone wants to hear that we're expanding to new markets. It's probably going to help you with every new round, right? And of course, you're going to need to make sure you have a healthy runway to support that enhanced capability that you'll need. So what's the best way, do you think, for entrepreneurs to kind of sync these two key steps?
Yeah, it's a good question. So this is something we do a lot of coaching on. There's a really big challenge that early stage startups have, which is matching a really big appetite and an ambitious, or a perception of ambition in the founders to be a really big global company eventually, to currently being extremely focused on a very specific strategy. And how do you balance those two things? And so from a very early stage, you need to have your eyes on new markets, or at least have the perception that you have a plan to do that in a not too distant future. Otherwise, you'll just get lumped in as like a SME based in Singapore or wherever you happen to be. The challenge is when you actually do execute on that and actually move into new markets. And like I said, typically that from a round perspective, I'd say after you raise a seed, that's often where you start poking around and running experiments. Typically, when you'll go whole hog as far as like a full office and a team on the ground is usually like a post Series A. And the reason for that is because depending upon your funding round, of course, post Series A could potentially give you more money than you need for your current operations. And so that if you do spend, let's say, 1 out of the $5 million of your round opening an office in Jakarta and it doesn't work out after 6 months, you haven't completely destroyed your home business, and you can kind of regroup and see what you might do next. So that's typically what we see. But I think literally even after you go after your first angel investor, you should have some sort of plan, or at least pretend to have a plan for where you could go next and why. And I think just thinking through that and having it in your mind, but certainly talking to that effectively, will raise the perceived valuation ceiling of your startup, make it much more likely to get a check written, and make it much more likely that your valuation will be at a competitive level.
Yeah. Oh, you heard it here first, entrepreneurs. Pretend to have a plan, even if you don't.
We're all salespeople all the time.
Right, absolutely. Raunak, then Keith. Okay, so let's say you've done all the above. You're now penetrating global markets. What are the biggest challenges that you can expect to see?
So I think it's very industry specific, the kind of industry we are in insurance. So we face 2 hurdles. And I think if you'll speak to anybody who's in a startup phase in the insurance industry would probably say the same. The first part is the awareness of insurance, or insurance being a daily commodity in the life of a common man. It's not there. It's not at the optimal level. And hence, people don't know when they are taking risks, whether there is a product in the market that they should be buying so as to cover them for any risk that may come in the future. That's one part of it. The second part of it is around the regulation aspect. Now, as we have entered into different markets, we have gone pretty deep into how the regulatory landscape is in that market. But when you are working with partners, the partners also need to have a similar understanding or a similar interpretation of the laws and regulations that are there. Generally, in an industry like insurance, which is like 300 years old, um, some of the things are really archaic. And as a result of which, they are prone to being misinterpreted. And I think that leads to business cycles being fairly large, and you may end up losing out on an opportunity to capture business that you may have thought could have probably happened fairly quickly. So I think these are the two challenges we generally face from an outside in perspective. The other challenge, of course, as I mentioned earlier, was you expanded into a market, and now you are walking a thin rope between whether you penetrate into an already existing market. And by the way, there is no template that tells you that, hey, you've penetrated more than enough. I mean, of course, if the growth starts stagnating, you would know. And on the other side, you are entering into markets, right? So you're walking that thin rope that how do I actually optimize or move around my resources, be it in the form of money or let's say tech investments and all. And that's pretty much it. I think the other challenge I would say we've faced is because when we're doing fundraising, you always get this question asked, um, and it's a question that has answers on both the front, right? So if you are only in one country and not in other countries, then the question of concentration risk comes up, right? That tomorrow, if there is a macro disturbance, this may impact you in a negative way, right? Or if you have moved into multiple countries, then people ask you a question that have you spread yourself too thin? So I think there's no right or wrong answer to it. The best way to answer it is that whatever you are doing now or over the next, I would say 12 to 18 months, you have the capacity to be able to take the load coming out of it. And I think investors, especially, I think Craig may probably have an opinion on it, especially in Southeast Asia, they're very appreciative of a multi-market strategy. Of course, if you were operating in an overall Asia landscape where you've got countries like India and China, which are very big monolith markets in themselves, then it's a completely different ballgame. But I think overall, in my experience, I have seen investors being very, very appreciative of a multi-market strategy, at least in Southeast Asia.
Keith, biggest challenges? Quickly, if you can, because I really do want to ask an audience question if I'm able to.
I just got the 3 points to put forth. I think first for us is about customer confidence building and trust building. I think that one is one of the key challenges because you're new to the market. For us in the investment business, it's all about trust, you know. And that comes with building track record, you know, working with strong folks on the ground and stuff like that. Next is distribution. The way we market our products, right, varies from country to country, right? Sometimes, honestly, the web-based online method doesn't work at all. So we might have to do a more on-the-ground way of doing it, you know, through referrals, through tie-ups with partners and so on and so forth. Third one is regulatory. That one, we just have to deal with it. You know, it comes in every country, you know. That's something that we just have to knuckle down and find a way out, and yet not affect your business model too much. I think these are the three key challenges for us.
Absolutely. Okay, so we have just over a minute left. I'm going to put this question to Craig because it's also something that Raunak mentioned in his last answer as well. So Dr. Alex Reyes asks, she said, in Southeast Asia, we have a different temperament and policies in terms of education. Would you say Southeast Asia is still a good market to penetrate despite the risk of different policies in terms of online learning? So I guess this question is all from the perspective of the edtech space, knowing that, you know, the massive size of the market. What would you say from the VC point of view? Raunak mentioned, you know, the temptation to go into big monolith markets versus like, you know, Southeast Asia, where it's obviously much more fragmented. What would you say there, particularly in terms of education, so you can answer Alex's question?
Yeah, so edtech's a huge market. It's super crowded. It's really hard to stand out and differentiate yourself. So that's kind of challenge number one. Is even within Singapore, there's like hundreds and probably over 1,000 edtech companies. So what are you doing differently, and how are you going to stand out? Moving into different markets. EdTech can be quite challenging. Again, sometimes what you'll find is that markets quite farther afield are actually a better fit. So we have a portfolio company that's gotten decent traction in Singapore. She's run experiments all around the region and beyond, and it seems that South Africa is actually the best fit for her expansion strategy. And she's secured investment from a South African investor to expand there. So I think, one thing I would say with that is don't keep your eyes so close to home necessarily. It's not necessarily the case that just because it's geographically close by that it's actually your best option. And so that's probably what my answer would be to that. EdTech is tough. Good luck, and make sure you have a very deep differentiator for your product, and you have metrics and traction to prove that you're going to stand out in a very crowded field.
Right. Excellent. Great. We're out of time now. Keith Ong, Raunak, Mehta, and Craig Dixon, thanks so much for joining. I have loads more questions we didn't get to, but it's been a really insightful discussion, and I'm happy we could have it this afternoon. I hope that sheds some light for the people watching. Thanks so much.
Thank you.
Thanks, everybody.
Thank you. Thanks, Ran.